Good afternoon, ladies and gentlemen. I, Deepak Singh, DGM Strategic Management, welcome you to the Punjab National Bank's earnings conference call for the period ended 31st March 2024. The bank is represented by the Managing Director and CEO, Sri Atul Kumar Goyal, sir, Executive Directors, Sri Kalyan Kumar ji, Sri Binod Kumar ji, Sri M. Paramswamy ji, and Sri Bihu Prasad Mahapatra ji, and other senior members of the top management. The structure of the concalls that include an opening statement by MD and CEO, sir, and then the floor will be open for interactions. Before getting into the con call, I will read out usual disclaimer statement. I would like to submit that the statements given herein are not guarantees of future performance and undue reliance should not be placed on them. Such forward-looking statements necessarily involve known and unknown risks and uncertainties which may cause actual performance and financial results in future periods to differ materially from any projections of future performance or result expressed or implied by such forward-looking statements. Investors are therefore requested to check the information independently before making any investments or other decisions. Over to MD and CEO, sir.
Thank you very much, Deepak ji. Good afternoon to everybody. I welcome all the analysts and the investor attending this conference call also. And it is my pleasure to present the quarterly as well as the yearly result of the Punjab National Bank for the financial year March 2023-24. This quarter as well as the financial year was the one of the best quarter in the year for the Punjab National Bank as well as financial result of the bank is concerned. And I think whatever I have promised to all the analysts and the investors in the last quarter or the previous quarter also, I think we are in a position to deliver the same number, whether it is a NII, we have projected around 10% growth. Similarly, the operating profit, we have projected the growth of around 10%, and we have given the guidance that gross NPA will be less than 6%. It is 5.73%. Then we have given the guidance net NPA will be less than 1%, and PCR will be more than 90%. That is 95%. So I think we have tried our level best to come up to the expectations of the all the analysts also, and we definitely need your support also. So I will give my opening remarks. As far as gross business of the bank is concerned, it is 23.53 trillion with a growth rate of 8.6%. The composition of this gross business in the gross deposit, it is 13.69 trillion at the end of March 24 with a growth rate of 6.9%. As far as advances or credit is concerned, there is a good growth of around 11.2% YOY, and it is stood at 9.83 trillion. CD ratio is very comfortable, 71.79%. Saving, there was a growth of around 3.5%, and it is stood 4.80 trillion. And CASA, total CASA is the 5.38 as on March, 5.38 trillion as on March 23, increased to 5.52 trillion with a growth rate of 2.7%. The CASA percentage was 41.44% as on March 24, and our guidance for the CASA for the next financial year 24-25 around 42%. As far as RAM is concerned, RAM is around 55.18%. It is 5.20 trillion out of the total advances of 9.83%, and we want to increase the RAM to the 60% in 2 to 3 years span. As far as come to the profitability number, the net interest income, there was a growth of 9.1% in quarter to quarter, YOY. 9,499 was the number of the NII March 23 quarter, which has increased to 10,363. If you see the whole of the year, 22-23, the NII was 24,492, which has increased to 40,083 with a growth of 16.2%. So quarterly YO growth was 9.1% and yearly growth is 16.2%. Similarly, the operating profit for the quarter ended March 23, it was 5,866, which has improved to 6,416 March 24 quarter with a growth rate of 9.4%. If you see the operating profit for whole of the year, it was 22,529 for the financial year 22-23, which has improved to 24,931 with a growth rate of 10.7%, and we have given the guidance of around 10%. As far as net profit is concerned, there is a jump in the net profit. The net profit of the quarter 4 2022-23 means March 23 was 1,159 crore, which has increased to 3,010 crore rupees in March 24 quarter with a growth rate of 159.7%. And the profit of the whole of year 22-23, 2,507 crore rupees, which has increased to 8,245 in 23-24 with a growth rate of 228 crore rupees. I would like to tell the net profit of whole of the year in 2022-23 was 2,507 in the last quarter itself. We have crossed this benchmark, and the net profit of the last quarter of the 23-24 was more than 2,500. It was 3,010. So one whole of the quarter we have achieved in the last quarter of the current financial year, that is 23-24. And as far as one more thing I would like to tell you, the operating profit number which I have told you, 6,799, and the NII 10,363, operating profit 6,416, as well as net profit 3,010. The three number for the last quarter of the financial year 23-24 means March 24 quarter is the highest in the last 16 quarter of the Punjab National Bank. As far as GNPA number is concerned, the GNPA, which used to be around 77,328, has reduced to 56,343, and percentage has reduced 6.82 to 5.73 from March 23 to March 24. Similarly, the net NPA, which used to be 22,585 March 23, has reduced to 6,799, less than 7,000. 2.72 was the percentage of the net NPA March 23, has reduced to 0.73, and our guidance was it should be less than 1%. So we have also achieved this guidance. The PCR 86.90% was March 23, has improved to more than 95%, 95.39 March 24. Most important is the credit cost. If you see the credit cost, the credit cost for the last quarter of the 23-24, 1,957 crore rupees, we have provided provision for the NPA, which is coming 0.81%, as against December 23 quarter 1.26. And if you see the full of the year, it was 1.40% credit cost, as against 2.03 in 22-23. And our guidance for the next year 24-25, it will be less than 1% the credit cost. So credit cost and the slippage ratio also. Slippage ratio, if you see, last quarter slippage ratio was 0.98, and slippage ratio for the whole of the year 23-24, it was 0.72%, as against the 22-23, as against the last year 2.31. So our guidance for the next year 24-25, the slippage ratio will be less than 1%. As far as capital is concerned, the capital adequacy has been improved from 14.63 in December 23 to 15.97. 14.63 to 15.97. This is on account of the profitability of the whole of the year. As I told you, 8,245 was the total profit. Then after the dividend part, which I will also explain. After, so it has been increased, and last quarter also we have raised 81, also around 1,800 crore rupees. So on account of this capital adequacy ratio has increased to 15.97%, as against the requirement of 11.5%. Cost of deposit, if you see, it was 5.454 in the March 23, which was 4.94 in the December 23, has increased to 5.06. You are aware, on account of the increase in the deposit rate, this cost of deposit was bound to increase. Similarly, the yield of advance, which was 8.05 in March 23, December 23 it was 8.54, and it is flat 8.54 in the March 24 quarter. As far as NIM is concerned, NIM for last quarter of the last financial year, March 23, it was 3.38 domestic NIM. It was 3.25 for the last quarter, March 24, and NIM global, it was 3.24 in the March 23 quarter, which is 3.10 for the March 24. If you see the whole of the year, it was 3.23 domestic and 3.09 is the for the global. Last time we have given the guidance that our NIM will be around 2.923. That we have achieved, and the next year also guidance is the 2.923. Although we are giving the guidance little, whatever we have got the NIM, but our effort will be there. Last time also I advised you, our effort will be like this, ki every quarter by quarter, net interest income should increase in the absolute number. So as far as fresh addition is concerned, the last year March 23 quarter, the addition was 3,996, which has reduced to 2,206 in the quarter March 24. And if you see the whole of the year, the 22-23 total addition was 16,029 crore rupees, which has reduced to 5,826. So two things, I think we were able to contain the slippage. We were able to reduce the credit cost. This was the one of the factor to increase the profitability of the bank. And since we have already improved our PCR 95%, I am hopeful in times to come there will be a scenario, there will be a reversal of the NPA provision. As far as total recovery, because if you see the movement of the NPA, which you must have seen in the NRS presentation, because the recovery in the TW account, because we are having the good kitty of the TW around 90,000 crore rupees, that is not reflecting in the movement of the NPA. The total recovery of the bank, including TWO as well as the derecognized interest, 22-23 May it was 29,095 crore rupees as against 32,000 crore rupees. If you adjust the recovery and the addition of the same year, that it will be 24,576. And this number we have given for the current financial year 23-24 it was 22,000 was our target, and total recovery was 22,530. So you can see that fresh addition was 5,826 against which total recovery was 22,530, including the recovery from the right of account. One more thing I would like to clarify, if you see our establishment cost has increased, because that is only on account of one thing, AS15 provision. AS15 provision for the March 24 quarter was 2,396 as against 1,244 in March 23 and only 333 crore rupees in December 23. The reason for the increase of the AS15 on account of 3-4 reasons. First is, as per the new settlement, leave encashment, which was 240, has increased to 255. So additional leave encashment will be available to the employee at the time of the retire, 15 days at the enhanced salary. 15 days and enhanced salary for the entire 255. This was the one of the reason. And GSEC rate, which was 7.18 in the December 23, has reduced to 7.05 on account of the change of the yield. On the reduction side, pension requirement has been increased. The third is the pension requirement, AS15 has increased on account of the increase of the wage revision, which was 17%. The one more thing, because Escracia was also introduced first time in the new settlement, it has also impacted the AS15 provision. So on account of this, 2,396 we have provided in the March 24 quarter. This was the reason. Otherwise, if you reduce this from the establishment cost, so payment to the wage revision is on the more or less on the quarterly basis, same. And point number one. The another thing is the credit cost. I have already discussed with you also. It was 0.81%. and 1.4 for the whole year, and which will be less than 1% of the next financial year. Sector wise slippage, agri mein it was 8804 804 crore, MSME 666 crore, retail 422 crore rupees, others 187 crore rupees, and 128 crore rupees was increase in the existing account. So this was the breakup of 2206 crore rupees. As far as normally you ask about the what is the floating rate on the credit side, as on date MCLR पे 35%, repo around 40%, TBLR 10%, fixed में around 9%, other is base rate 2%. So this is the about the composition of the interest rate on the floating and the fixed also. The one more thing I would like to tell you, our new underwriting, which normally I give you every quarter. How the new underwriting behaving, because you may be asking why there is a reduction in the slippage. So we have taken a lot of initiative how to improve the underwriting standard, as well how to improve the collection efficiency. So we have done a lot of work on this. On account of this, I will give you the data from the 1st of the July 20. So it is a data of around more than 40, more than 3.5 years. So in new underwriting में 7.87 trillion we have sanctioned, 7.10 trillion we have disbursed, outstanding 5.53 trillion, and NPA in this new underwriting is last more than 3.5 years is 1,775, which is coming only 0.25% of the new. So this is the one of the reason for containment of the slippage. And I can give you the further breakup segment wise in this 0.25. Agri mein it is 0.38 only. MSME it is 1.42. Retail it is 0.21, and others means corporate में it is negligible नहीं है इसमें. As far as capital adequacy is concerned, we are adequately capitalized because our capital ratio is the 15.97 as against the requirement of the 11.50. Even CET1 is 11.04% as against the requirement of 8%. More than 3% we are having. Similarly, the AT1 2.13 as against the requirement of the 1.5, and Tier 2 is the 2.8. And as far as our capital raising plan is concerned, although we are not immediate need of the capital because we are already 15.97, we have got the approval of the board for raising 7,500 QIP in the coming financial year 24-25. In addition to that, we have already have the approval of the board for 7,081 and 3,000 crore for Tier 2. So total we are having in place board approval for this 17,500. So this is the capital plan. One more thing I would like to highlight you, what is the position of the NCLT, which you normally ask. NCLT में 805 account we have applied for 1.03 trillion, out of which 776 account of 1.02 trillion has already been admitted. 24 account of 1,737 is still to be admitted. As far as recovery in NCLT is concerned, 3,603 crore recovery we have made in the last financial year 23-24. Quarter wise recovery, first quarter 566, 556 in the second quarter, quarter 3 1,831, and the fourth quarter is 648. This is from the NCLT, and we hope around more than 3,000 crore rupees, around within the range of 3,000 or 3,200, we should be in a position to recover from the NCLT route in the coming year 24-25. As far as transfer of asset to NARCL is concerned, last year we have transferred around 12 account to the NARCL of outstanding of 3,524 crore rupees. I think I have tried my level to cover all the things also. So I will stop myself with this my initial remarks. We will be happy to answer if you have any question, any query you are having in mind. Once again, I place on record the support which we are getting from all of you and to improve the performance of the bank. Thank you very much.
Thank you, sir. Thanks a lot for the elaborate opening remark. Very good set of performance for this fourth quarter number. So just to start with, sir, there are a couple of PSU banks which have already announced their numbers, and RBI circular, draft circular has also come on this provisioning requirement on this project finance issue. So would like to, get your opinion and, what is the exposure that we have, and would there be any impact on our bank or not?
Rakesh, I think this is a question we were thinking you're asking in each and every analyst meet, in each every media also. I think from the regulator point of sight, point number one, it is a draft guidelines. The RBI has given the draft guideline. It is for the consultation to all the stakeholders, whether it is from the borrower side, whether it is from from the bank side. I think we should not be panic. It is from the regulator point, risk perception. The regulator is thinking if there is a more risk, there should be more provision, and this is they are trying to bring in the discipline. There should not be a time lag, whatever the DCCO they are bringing, and this timely completion of the project. So from the regulator point, I think there is a merit on this also. Now your question will be 5%. They are saying earlier we are making 0.40%. Now we have to make the 5%, then 7.5% where the DCCO is increasing. Then it will come down to 2.5% for the operational project and 1% for the after the cash flow has been paid, 20% after the DCO. So this may be the point of discussion whether it is adequate or not. This is a consultating process because the RBI has given the timeline for 15th June of the 2024. So we will discuss this matter what should be the provision requirement should be. And one more thing I would like to tell you, Rakesh, because if you see a lot of clarification is also required. In my opinion, personal opinion, this draft guide is applicable to all type of the infra project, non-infra project also, project loan mein. Even it is applicable for the small amount also, whether it is 50 lakh or 1 crore rupees. So we will also take the clarification whether it will be applicable to or we will take up whether there should be some limit also this will be applicable. I mean, you are asking for the what is your exposure also, because this actually guidelines is applicable to the where the DCCO. I have given so many loan which I am putting in the infra, classifying in infra. Let us take the example of the InvIT. I have given the loan to the so many InvIT. They are an operational project. I will classify in the infra. Moment I will give you this is the amount. So that is not applicable out of the purview of the circular. I think we should wait for a little bit. We should think and we should take up the matter. But the question will be what should be the provision requirement. I think bank is with the as on date bank is very healthy balance sheet also, and provision is normally required when the position of the is healthy. So I think from the regulator point of view, I think it is a appropriate guidelines. So I am not panicked. As far as even if we are required to provide, so we are very comfortable. We will be easily in a position to whatever the requirement of the regulator will come, we will abide by that. So this is my opening remarks for this.
Got it, sir. Got it. Thanks, sir. Maruk, you can unmute yourself and go ahead.
Hello, sir. Can you hear me now?
Yeah, Maru. Good afternoon.
Hello, good afternoon, sir. Good afternoon. Thank you for your comprehensive opening remarks. So, I have a few questions. Firstly, you can help us on what the monthly wage bill will be or quarterly wage will be bill will be from next year. That will be helpful. Secondly, if you could give us some outlook on loan growth and margins, right? Because fourth quarter anyway, margins look a little better than previous quarters because of higher recovery income. So if you could call out the recovery income separately in the fourth quarter and third quarter, and also talk about sustainable margins for the whole of FY25, that would be helpful.
Maru, as I have clarified, 2,396 we have made a wage provision. If you see my total payment to the employee for the last quarter is 5,630 crore rupees. So if you reduce 2,600, it is coming around 3,300 plus. But our average will be around 3,500, because if you see the wage area, in December 23, we have made 800 provision, but March quarter, because we have provided sufficient in the earlier quarter also, so there was no requirement to make the provision for wage revision in the March 24 quarter, which was 150. So this is the reason actual payment is coming on the lesser side. So in my opinion, wage revision should be around 3,500 to 6,600 as far as wage bill is concerned, apart from the AS15 provision. Your second question about the margin also. Margin, as I told you, Maru, if you see my NII, the 3.25 for the last quarter is domestic and 3.10 for the global. And last year also we have given the guidance, it will be 2.9 to 3 and 2.9 to 3%. It is sustainable. This is the reason we are giving. Last time also you were telling ki it should be more than 3, so we have given 2.9 to 3. It is a really sustainable also. And one more thing, if you see every quarter, last time I also told you, whatever guidance we are giving for the NIM, but our endeavor is like this: quarter by quarter, my net interest income in absolute number should increase. And if you see the last 8 quarters, every quarter it is increasing.
Got it, sir. So, I just have a comment on what you said about the draft circular. So, your point is very well taken that the bank has good provisioning now. So, they are in a you are in a comfortable position to take any higher provision. But, sir, that on the back book or on the existing book, you will be able to take the provisions that are due, right? And you will also have a lot of operational projects. So, to that extent, your provisions will be lower. But the point is that each incremental loan in CAPEX, say the guidelines are applicable from today and you're doing new CAPEX today, each incremental loan will come with a 5% burden for 3 years at least, because that's the operation, that is the time to, construct any basic project, right? So, I mean, these loans may be loss making or may be very, very costly for at least 3 years, after which the pool stabilizes. And that's the concern, that it will hurt CAPEX and therefore it will hurt overall banking loan growth, because people were very optimistic that with CAPEX, loan growth in the banking system will improve.
Madhu, to some extent you are right. As I told you, from the regulator perspective. And my again request to all of you, it is a draft guidelines. Whether it has come into implementation for the 5%, the regulator has given this paper for the consultation. It will be everybody, every stakeholder will give their views also. If you are thinking the promoter, if it will hurt that, they will give the request for the reduction also from the, even from the banker side also. So I am just telling from the risk point of view, if there is a risk in any project or the implementation risk, definitely, so from that point it looks good. But definitely, it will definitely hurt to the bank if you are required to make the project, the promoter also. So it is a consultative. So let us wait for the final guidelines. 15 June is the time. We should wait for the final guidelines, how the regulator is taking. So this is my view on that. Because you are saying if 5% has to be implemented, it has to be, if suppose we are, for a minute, suppose we are thinking it has been implemented, definitely 5% has to be implemented. So definitely we will try to pass on also, because ultimately profitability will be little less, than capital requirement of the bank will be increased. Even for the NBFC. But for the NBFC also, regulator has increased the RWA on the NBFC, and we are in a position to pass on that. Whatever the additional pricing we have passed on, I think more than 80-90% borrower has already agreed. So even in this case also, if there is some need of the increase of the pricing also, so we will pass on that. Some we will bear, some the promoter will bear.
Okay, sir. Thanks so much. Thank you and all the best.
Hi, Jay, please go ahead with your questions. Jay, you can go ahead with your question and unmute yourself and go ahead with your question. Response from Jay. Ankit, kindly unmute yourself and go ahead with your question. Hi, Ankit. Sir, I have just a couple of questions. Firstly, on the LDR side, sir, like LDR has, reduced this quarter. Like, what is the, target LDR that we would like to keep, like for FY25, basically?
ये loan to deposit ratio ना देखिए, it has not, it was 69.05%. In March 23, if you compare March 23, it has improved 71.79. And if you compare definitely from the last quarter, it was 73%. So I think we are on the lower side also. We will try to improve 73 to 75. This was the reason. If you ask me now, why there is not a growth in the deposit, your question should be why the deposit growth in the deposit 6.9%. Because I don't require deposit. My CD ratio is very comfortable. Even if this CD ratio, I am having the excess SLR of more than 1 lakh crore rupees.
Okay.
Hello, I'm unmute.
Yeah, Ankit. Okay, Ankit, please go ahead.
Hello, sir.
Yeah, hello, Ankit, please go ahead.
Sir, congratulations for the great set of numbers among all the PSU banks. Sir, my first question is, after performing this much, sir, what is the future trajectory? And sir, from which segments queries for loan are coming that you are seeing how the economic conditions are prevailing? Sir, which sector are you more confident for distributing the loans?
Ankit, 2-3 points I would like to tell. एक तो देखिए, there is a good demand in the RAM sector, whether it is a retail में particularly for the housing loan, particularly for the vehicle loan. So RAM, if you see my percentage of the total loan to the RAM is around 55%. And we want to increase this number to 60% in times to come. So this will be our focus area. But second, we are one of the largest bank of the country. If really we want to support the economic growth of the country, definitely we should give the loan to the corporate also. So what trend I am seeing, earlier they were not using the working capital to the extent they have already got the sanction. Because maybe on account of the profit earning was also good of the corporate also. Now they have started utilizing also. Even if you see the lot of capex has not come in the last year from the private side also. Now I am seeing the traction also. Some of the steel industry, some of the cement industry, because on account of the infra, there is a lot of demand from this sector also. So some of the corporate now they are approaching us for the expansion in their steel production city, and as well as the in the cement also. And there is a lot of demand in the road project side also. We have a finance lot of road project also in the last year. There is a good demand in the current year also for the road. So I am seeing there will be demand from the retail, RAM sector, infrastructure sector, particularly road, etc., even the gas pipeline, etc. And there is a capex in the steel and the cement. This is my takeaway here.
Sir, okay, sir. Recently, you have been tied up with IREDA. Are you seeing any traction in that green projects there? Why you have tied up? Any comment on that?
देखिए, we have tied up with the IRDA, we are tied up with the REC also, and we are going to tie up with one more of the infrastructure financing company. The purpose is only this, because sometimes they are getting the project for more than a appetite which they are having. So they can pass on the some of the part of debt to us also. So this was the only purpose, to make the tie-up with them also. So because they are having the expertise, they are the expertise of the financing the project of the infra like IFSCL, NEFID, or the REC, etc. Even the PFC also for the power project. So they have the expertise. So if they are not in a position to take the entire loan for that particular, so we are participating in that. That is the only purpose.
Okay, sir. Slippages quarter on quarter have increased. Any concern, sir?
No concern. We are having the book of around 9 lakh, more than 9 trillion. So very hardly amount. If you see the 2,206, and last year last quarter it was 1,780. The 200 to 300 definitely. If you see the last 8 quarter, every quarter is reducing the slippage. But there should be some benchmark also, na. Every quarter by quarter is reducing. So there is no, even the, I will give you the sector wise slippage also. The Agri 804, MSME 666, Retail 422. The other is 187, out of only one account of around 100 and 110 crore rupees. So there is no worry at all. And if the slippage is there, we will recover. If you see our recovery is more than 2 times of the slippage.
Okay, sir. Last question, sir. Sir,
Ankit,
why the dividend
Ankit,
is now so low, sir?
Ankit,
If
there
you
are
are...
other people on the queue. Ankit, I will
Please, sir,
request
last
there are other
question, sir.
people.
Please.
You are asking for the dividend, na, Ankit?
Yes, sir. Why it's so low, sir? Please, sir.
Last year we have declared the dividend 32.5%. It was 65 paise per share. We are having the share of 2 rupees. This time board has recommended, subject to approval of the shareholder, 75%, 1.5 rupees per share of 2 rupees. And total
But
payout of the profit is 20.03%.
But other PSUs are giving a lot, sir. Now you are profiting a lot, sir. Why? Please shareholders को भी reward कीजिए, sir.
Ankit, can you repeat? Ankit, can you repeat what is your...
Sir, I'm saying, sir, now you are very profitable. Other PSUs banks are giving a lot more than your face value. Like you have given 75%. Canara Bank has given a lot, I think double. Sir, please, sir, थोड़ा बहुत shareholders के बारे में सोचिए.
Ankit, I have given more than double. You are telling Canada Bank has given double. I have given more than double. 32 to 75. It is coming 64.
Sir,
Against 64, I have given 75%.
Yeah, Jay, kindly unmute yourself and go ahead with your question.
For the opportunity. Sir, I wanted to check on CD ratio, right? So we had said that our focus is to improve net interest income in absolute amount, and that we have been doing for the last few quarters, right? Our CD ratio to start with was already low, right? Now in this quarter, the loan growth is not very high, it's only 1-2%. So what happened? I mean, we had excess liquidity, we could liquidate some excess SLR also. So what actually happened that our LDR actually declined, and we could have improved even further. If the growth was low, we could have improved.
Mudra, Jay,
Yes, sir.
if you see, I will give the answer of your question. 73% was the CD ratio in the December 23. Definitely it has declined to little bit, 71.79%. So definitely if we will not raise further deposit, because there is no need for the deposit, so automatically it will improve. So as I told you, for next year, our guidance for the credit growth is 11 to 12%, and this is the reason we have not raised the bulk deposit, because bulk deposit is not available less than 7.5 or 7.
No, I understand about future, sir. I am asking in March quarter, why did our
Yeah.
CD ratio decline? I mean, if in future we want to improve or increase
It
CD
is a
ratio,
simple answer. It is a simple answer, Mudra. The credit growth, deposit growth was much more in this particular quarter as compared to the credit growth. That was the only reason. Nothing else.
right? But
Even, yeah,
and
please,
why?
please.
No, no. So, and would that change, sir? Because at system level, there may not be any change, but would it change for your bank that now credit growth will be higher and deposit growth will be slower?
Jay, as I told you, I am having the 1 lakh extra SLR also. Then we will see whether if deposit is cheaper, and I am having the another avenues also to deploy that fund in the more remunerative manner. Then we will raise the deposit. Otherwise, not. If I am do not have the opportunity to gain the on the deposit side also deployment. Otherwise, we will not, because we are having. Then we have to see at what rate we are getting the deposit, what I am getting on the yield on the investment.
Okay, right, right. And sir, on your, I mean, we have a guidance of 18,000 crore of recovery, right, for full year. Is there any, definite, uh, definite exposure or chunky exposure out of this? Let's say how much, or where do you have a visibility of more than, let's say, 500 crores? Are there any some of those assets, or this is likely to be granular only?
Jay, it is our gold mine. 90,000 crore rupees we are having the TWO, and around 55,000 crore rupees we are having the gross NPA. 1,45,000 crore. We have just made analysis ki how much we are in a position to recover. Even we think ki 40% of the total, 40 to 50% of the total. So every year we will be in a position to recover easily around 15 to 20,000 crore rupees easily. Even if you are asking for the some bulky account also, we have made an analysis ki what should be the recovery from the basically NCLT. So NCLT last year we have recovered around 3,600, and we have made a quarter-wise analysis. Even we are thinking around 3,000 to 3,300 will be recovery from the NCLT in the next financial year. And definitely we are also giving the focus on the small account also, because we are having the very good amount in the NPA in the smaller account also, and some of the account where we are having the sole banking and we have the collateral security also. So it will be a mix of all.
Right. So out of this, so let's say 3,000 to 3,300 crore is going to be the NCLT related, and
Yeah. That is our
rest
estimation.
should be rest should be granular only, right? 100 below 100 crore type.
It may be much more, because it is a recovery amount, which I told you. Sometimes we have to take the haircut also. It may be account may be more than 100 crore rupees, but you are getting less than 100 crore also.
Right. Okay. And sir, on credit growth, we are saying 11 to 12%, which is lower than last year 12 to 13% guidance. Our net NPA has improved. Our capital has improved. Our profitability is also improving. So why 11, 12%, sir? And within that, how much could be corporate credit growth?
Yeah, if you see my credit growth in the June quarter, September quarter, and the December quarter, if you see the growth was more than the guidance, 12 to 13%. June quarter it was 14.6%. September quarter
Right.
it was 13.4%. December quarter it was 12.9%. But last quarter 11.2, because if you see the March 23 quarter, we have done some bulk deal also. On account of this, it has decreased. Otherwise, we were at par whatever guidance we have given. This is the reason we are giving the growth of the 11 to 12%. If definitely is opportunity will come where we are in a position to give more than the 11 to 12% also, so we will revise the guidelines. But as on date, it is 11 to 12%.
And how much of that could be corporate, sir? Would it be similar, 11, 12%, or higher or lower?
It is the availability of the corporate as well as the RAM also. As I told you, our focus will be on the RAM. If we are in a position to garner good deal in the corporate also, we will not mind to lend them also.
Right.
Yeah, Jay.
Thank you, sir. Last question. if I may ask.
Yeah, okay, Jay. Okay.
That's the last question, sir. RBI had, there's a new investment norms from effective from April 1st. You can quantify what is the accretion to CET1, AFS reserve, and general reserve post as of April 1st. Thank you.
Yeah, Mudra, because this new guidelines is applicable from the 1st of the April, and we are required to shift from the STM, AFS, HFT. There is two more, the FVPTL, the FGJVP. Your specific question, what will be the amount which will be transferred to the general? That will be around 5,000 crore rupees.
Okay. Great, sir. So that number is good, sir. I mean, other banks have reported slightly, I mean, 1/3 of your number. So this
Yeah.
number of 5,000 crore accretion looks very good. Thank you, sir.
Thank you. I will request Saurabh to go unmute yourself and go ahead, please.
Am I audible?
Yes, yes.
Saurabh,
Okay,
yeah,
thank
yeah,
you.
please.
So just two questions. One is on your OPEX growth, could you just quantify how much do you expect it to be, especially both if you can break up between staff and other expenses? And the second is in terms of your gross slippages, so what is the number you would guide for? Thank you. These are two questions.
As far as the key OPEX, I will divide into two parts. First is the employee cost, another is the OPEX. And if you see the payment to the employee, it is around 5,630 in the last quarter. But there was a one AS15 provision around 2,396. So if we are thinking definitely in the times to come, our requirement of the AS15 will reduce because it is on account of the increase in the wage revision, etc. also. So I think it will be in the range of the wage revision will be in the range of the 3,500 to 3,600, and in addition to that, whatever the requirement of the AS15 provision we will make. As far as your concern, the other operating expenses is concerned, other operating I think within the range of the 5 to 7% there will be increase. There will not be much increase the other operating expenditure.
Saurabh, do you have any other question? Sir, just I had one question on SLR, sir. So net, if we see from March 23 to March 24, we have SLR on the net basis, on the outstanding basis is still rising. And though the non-SLR number is stagnant. So just a broader question that, how, we would like to, because we have excess SLR, so that we would, liquidate the SLR and do the credit growth, or, we will kind of, raise the, the duration further and, try to, take some gain on the profit on sale of side, sale of investment side. So what is the what is the play that we are trying to, have on the SLR investment side, sir?
Rakesh, it will be the mix of the both. Point number one, whether we want to increase the SLR portfolio or not, it depends on the whatever interested view. If my treasury is thinking interest rate will fall in times to come, definitely it is a appropriate time to invest in the SLR securities. If they are thinking interest rate will move, definitely we would like to set some of the excess SLR also. As I told earlier also, how much I am getting on the investment in the SLR and vis-a-vis what will be my incremental cost of the deposit. So I have to see both the number also. If incremental cost of deposit is lesser than the whatever yield I am getting on the investment, I would prefer to raise the deposit instead of shedding my SLR. If deposit is much more than the whatever I am getting the yield on the investment, definitely I will not mind to shed my SLR investment.
Okay. Understood, sir. Understood. And sir, on the non-retail term deposit growth side, sir, how is the dependence, there on the, because that is also being handled by the treasury itself. So on the non-retail term deposit growth side, sir, so if you can tell us that, are we increasing the dependence there, or how the things are there?
Rakesh, this is the reason you see my deposit growth. This is the reason my growth is only 6.9%. We are not dependent on the bulk deposit. Also, need base we are raising because we are not in this market. But definitely, if need for where we are getting the more return also, then we are raising. Otherwise, we are not.
Okay. Okay. Got it. Maruk, do you have any question? Kindly unmute yourself. Okay. Anushka, kindly unmute yourself and go ahead with your question.
Rakesh, I don't have.
Okay. Anushka, kindly go ahead with your question. Anushka, do you have any questions? Hi, Saurav. You have any other questions, Saurav?
Just one question on your current accounts. So it seems that there's obviously loss of market share. Can you just quantify like what's happening there on current accounts for you specifically? And if let's say we do get a improvement in capex, you think that share for you can go up given your exposure into like corporate accounts? So if you can just talk about your current account. Thank you.
Saurabh, actually, I will take it differently. We are not losing the market share in the current account. This type of the deposit is very volatile. Sometimes you don't know at what time it will be increased, what time it will be decreased. Point number one, we are just issued the corporate mobile app, which will definitely help to come this segment also. Lot of people will come, they will open the current account through mobile app, which was not earlier, which we have launched in the last month only. Another thing, current account, if you see how many accounts we have opened in the last year, 23-24 we have opened around 2,68,000 account, as against the 2 lakh account which we have opened 22-23. The amount will also flow in this account, but this segment is very volatile. Sometimes you have 60,000, sometimes 70,000, sometimes 80,000. It is very fluctuated. But you are right, and we are very sensitive with this, how to improve this, because it is a zero-sum game for us also. So we are aware, and we are taking a lot of initiative how to increase the current account.
Hello, sir. I'm unmute.
Yeah, Ankit, please wait. Ankit, please wait. Vinayak, would you like to go ahead with your question? Kindly unmute yourself. Vinayak, kindly unmute yourself and go ahead with your question.
Hello.
Yeah, Vinayak, please go ahead.
Yeah. Good evening, sir. Thank you for the opportunity. So can you please quantify the amount of deferred tax assets you have, and is it possible for you to move to the lower tax regime from FY26?
Vinayak, actually, we are under discussion with our tax consultant also. As on date, we have not moved. Definitely, we are aware. If we will move, definitely there should be a benefit of the tax rate also. But as on date, our tax consultant is advised not to move to the new regime because we are having some entry which is related to the, which is beneficial for us in the old regime also.
Okay, okay, thank you, sir. And can you quantify the amount, sir?
DTA? That
Yeah.
I will send you, Vinayak. Yeah.
Okay, thank you, sir.
Yeah, Ashlesh, kindly unmute yourself and go ahead with your question. Ashlesh. Ashlesh, are you there? Kindly unmute yourself and go ahead. So there are one question in the chat box that out of the total return of pool, what is the the composition in the NCLT and non-NCLT of the return of pool, sir?
You are asking the how much is the pool in the NCLT and
Non-NCLT. So out of the total return of pool of around 90,000 crore, how much
Yeah.
is part of NCLT and how much is the part of non-NCLT loans?
in I have to check the exact number, Rakesh, but normally because the account which are in the NCLT is of the high value, so such type of the account we have already written off. So in my opinion, I will check the exact number. NCLT, whatever the account, it must have been written. The other will be the non-NCLT number. Yeah.
Got it. Ashlesh, kindly unmute yourself. Please go ahead, Ashlesh.
Was an increase in this quarter. So any reason for that? And
Increase
secondly,
in?
if you can share the
Just a minute. Increase in?
slippages in the agriculture sector.
Okay.
That has increased in this quarter. So reason for that. And secondly, can you share the average cost of term deposits on the outstanding term deposits and also on the incremental term deposits? Thank you.
As far as slippage is concerned, there is a very not very increased slippage. If you see it was around 1800 crore rupees and it was the around 2200. So 3 to 400 crore rupees is the total slippage. But if you see the agri may normally it remain around 800 to 700. So there is no much increase in the agri side also. So it is on the same line, but 200, 300 there will be a fluctuation also because we are having the loan book of more than 9.85 trillion. As far as your question about the average cost of the term deposit, normally, at least 95% of our deposit, 95% of our deposit has already been shifted to the new term deposit. So if you see my 1 year term deposit is around 7.25.
Okay. So you don't expect a lot of increase in the cost of deposits for you over the next few quarters?
95% is already been repriced. Only 5% which was in the long term in the nature. Maybe for 5 years, 6 years, that has to be. So I don't think there will not be because most of the deposit is in the 1 year in the nature.
Okay, perfect, sir. Thank you.
Anushka, kindly unmute yourself and go ahead. Anushka, kindly go ahead with your question. Yeah, Anand, kindly go ahead with your question. Unmute yourself.
Hello.
Yeah, please
Yeah,
go ahead.
yeah, go ahead,
So,
Anand.
so
Anand, go
basically,
ahead. Yeah.
So basically, first thing, sir, with the new investment classification norms, which have come from 1st April 2024, what will be the CET1 benefit that we will reap because of that? That is my first question. Secondly, we have heard a lot of news flows around, particularly in the state of Punjab, where the microfinance players have seen some stress. Any repayment behavior change that basically we have seen for any of our retail or the agri loans in the state of Punjab? Basically, if you can talk about that.
Anand, as far as your first question, what will be the increment in the CET1 on account of the new valuation? No, because basically the unrealized profit has to be taken into consideration. So as I just told you, around 5,000 crore rupees, because it keep on changing. Let me clarify to all of you, because there is because we are having the subsidy also, they are listed also. It keep on changing. It depends on the market. Because what was the market as on date, because it keep on changing, because it is not the entire is not the debt, because we are having some subsidiary etc. also we share is listed. So around 5,000 crore rupees I am telling as on the date of the first of the April it keep on changing. The another your question regarding the Punjab etc. also, so I am not seeing any delinquency in the retail or the agriculture side. It is across the same we are getting, and I have given the number also na. What is my new underwriting? The slippage in the agri is point around less than 40%.
Anand, please go ahead. You have any other question, Anand?
Yeah. So basically, sir, the third question that I had was about, the project financing exposure. So basically, I know that, the guidelines are still draft. Obviously, the IBA certainly will go back to RBI and seek some leeway over there. But is it possible for you to quantify the overall project financing exposure as on date on our book?
Anand, because there is a three type of the exposure. Ek to, because infra, non-infra, then DCCO, etc. So as I clarified earlier also, some of the loan, like InvIT loan we have given, it is classified in the infra, but it is not as per the circular also. The another we have discounting the lot of HEM project also, that is coming under infra also. That is coming in the infra. There is no DCCO because this basically is linked with the DCCO. जो circular has come. So as on date, we are not in a position to quantify what is the exact amount here.
But sir, if we have to just quantify, the overall project financing exposure, be it DCCO or not DCCO as such, then what will be that? Will it be 10% of the overall loan book?
Anand, because as I clarified you also, because lot of project which is very cash flow generated, like the InvIT I have done, usme the circular is not applicable. Even the discounting we have done for the HEM, the circular is no, there is a running operational project where the cash flow is coming. So I think it will not be correct on my part also to give that particular data on which the circular is not applicable. And it is a draft guide. Let us wait for the final guidelines also, na. I can assure all of you, whatever the guidelines of the regulator will come in the final guidelines, what it will be, we will be in a position to provide adequately. This I can tell you.
Do you have any additional question, Anand? Anand, do you have more questions on this?
Rakesh, I think in this Webex you have to unmute me, but I was not able to unmute myself.
Okay, now go ahead, please.
No, I don't have any further questions. Thank you.
Thanks. Thanks. Saurav, do you have any other questions?
Okay, thank you.
Thank you. Anushka, would you have any questions? Anushka, would you have any questions? You have raised your hand. So I think that is all for today, sir. We have no questions like any further from here. So we can wind up the session. We would like to request you to give any closing remark if you have, sir.
Thank you very much, Rakesh, and thank you to all the analysts also who has attended this meeting also. And we have noted some of the suggestion, etc. also, whatever we have discussed, and we have tried to reply all the question also. My request to, if any question which they want to ask, they can contact my share department in investor relation department also. So if you require further information also, so we will give you that information also. But one thing I can tell you, bank is on the very right path. There is a all-time growth in all the parameters, whether it is a operating profit, net interest income, whether recovery from the NPA account or the provision coverage. So we are very comfortable in all the ratios also. And one more thing I would like to tell, two things. This time we have made 150 crore rupees floating provision also for the NPA also. And not only this, we have also disclosed in our note to accounts also this OTR 1 and OTR 2, where the requirement in some of the cases is the 5%, some of the cases is the 10%. As on date, around 238 crore rupees extra provision we have made with the approval of the board, not only in this quarter, in the last financial year. We are providing 12.51%. So we are adequately providing all the things also, and very revision which I just explained you also. So whether it is a pension liability, whether it is a gratuity liability, whether it is a on account of the other leave encashment, so we are adequately provided. So our balance sheet has become very strong also. So as far as normally the question of the analyst is when you will be in a position to get the ROE of the 1% also. So definitely by the exit of this financial year 24-25, we should be in a position to achieve the 1% ROE. So with this word, I place on record the support and the guidance we normally get when we meet the analyst on the industry leader also, for the comment on our result also. So that is encouraging us to improve further better with this word. Once again, thank you to all.
Thank you, sir. Thanks all the participants and the PNB management. On the behalf of BNK Securities, we would like to thank the PNB management to giving us the opportunity to host you. Thank you everyone. We can close the session now. Thanks.
Thank you, Rakesh. Thank you. Yeah.
Thanks a lot, sir.